Hello guys, let's start our grind. Can you hear me? Am I audible? Okay, most probably I am, but yeah, let's start. Let's start with our grind. This is the result of past events or liabilities, anything which results in overflow of economic benefits from an entity. Liabilities and obligation arising from a past transaction or event A. Let's see. Okay, liability is a okay, is in present application of an entity to transfer an economic resource as a result of past events. Both of them have very similar wording, so I got slightly confused. Okay, next one is ninth. Which of the following statements best define an expense? An expense is an outflow of economic benefits in an accounting period. Expense is an outflow of economic benefits resulting from a purchase of expenses and outflow of economic benefits third party resulting from third party. An expense is an outflow of economic benefits in an accounting period. An expense is an outflow of economic purchase of resources in an accounting period. An expense is an outflow of economic benefits resulting in change. Expenses D. Each one of the following statements are true in relation to partnership. Partnership is a separate legal entity. That is not true. Partnership is jointly owned and managed by partners. That I feel is true. A partnership can raise capital by issuing shares to its member of public. That's not true. That can only be done by a company. A partnership is able to own property and other assets in its own name. That's not true at all. So answer is B. Which of the following statements is true in relation to a sole trader? A sole trader cannot have any employees. That's false. That's totally false. A sole trader can have how many ever employees he wants to have. There is no limit or a cap on which the number of employees is allowed to have and anything like that. Next, a sole trader cannot have uh, is able to introduce or withdraw capital from his business at any time. True. Sole trader has limited liability. That's false. A sole trader can operate. That's also false. The answer over here is B. Which of the following statements is true in relation to a limited liability company? Can incur liability in its own name? Is true. Limited liability company cannot acquire assets in its own name. That's false. A limited liability company cannot incur liabilities in its own name. False. Limited liability company can be formed on an informal basis by simple agreement between first shareholders. False, I believe. That's false. Because a limited liability company has to register first before it can even be formed. So therefore, that informal basis by a simple agreement is false. Answer is A. Which of the following items can be used to encourage? Which of the following items can be used to encourage executive directors to operate in the best interest of the company? They could be awarded a high salary. They could receive bonuses based on uh, which of the following items can be used to encourage executive directors to operate in the best interest of the company? They could receive bonuses both internal. They could be asked to attend annual. They could be awarded a high salary. B. Based on both the individual and company's performance, so therefore they'll work better. Which of the following statements relating to a partnership of 20 persons and limited liability company with 20 shareholders each with a 5% shareholding, 20 into 5, 5% shareholders, 2, 5, 5 to 5, 5 times of 1, okay, 100% to the both partners LLC. False. First one is false. Members of a limited liability company have the right to participate in management of a company, whereas partners do not have the right to participate in the management of the partnership. Partnership partners have the right to participate in the management of a partnership, whereas members of a limited company do not have the right to participate. That's nothing. Partnership is subject to the same regulations regarding introduction, withdrawal from capital. Answer is C. Partners have the right to participate in the management of partnership, while do not have the right to participate in the management. Which of the following items would not be included in the solar capital? Will not be included in solar capital. Equity share capital, revaluation surplus, personal drawing account, capital account. Equity share capital would not be recorded. Which of the following pairs of items would you expect to see in the final statements of partnership? Dividends paid, share capital account, and profit appropriation account. Profit appropriation accounts and dividend paid. Share premium account and capital account. See, one of the main things which you want to see in a partnership is one capital account of all the partners and profit appropriation account. Answer is B. Which of the following statements best define an asset? Asset is a resource which is owned by an entity with financial value. Asset is a resource controlled by an entity with which future economic benefits are expected to be generated. I believe the answer should be B because it is expected to generate future revenue as a whole. All remaining. Okay. This even though this D part does not have the full thing, it's a resource controlled by the entity. It's a present economic resource which is controlled by an entity as a result of past actions with which future economic benefits are expected to be generated. So I believe this answer or question is not incomplete. Something that I feel. Next one would be 17. Dividends paid and share premium account apply only to limited company financial statements. Amazing answers. D. Which of the following statements best define the equity or capital of a business? Equity, equity or capital of a business is represented by net assets of the business. Equity or capital of a business. Equity or capital of a business is equity and capital is the total assets of the business. So right now I'm doing financial accounting. I'm just started chapter, first chapter. हेलो जतिन बोल रही भाई फाइनेंशियल अकाउंटिंग फर्स्ट वाला चैप्टर सारा एमसीक्यूज कर रहा हूँ हाँ नाइस ब्रो जस्ट ओके थैंक यू आई डोंट हैव एनी वर्ड्स ब्रो yeah I saw which sir which topic anta and all you're asking who, who are you bro come sit and study bro what you're sitting and doing okay I'm sorry for disturbing you you sit and study don't have to sit and see mine and all you continue what you're doing don't worry bye okay bye thank you. Okay, as you're saying, 18th question. Which of the following statements best define equity or capital in a business? I believe the answer should be total assets of a business. See, equity and capital would be on the left side of the balance sheet, and total assets would be on the right side of the balance sheet. So both of them are technically equal because there is nothing else which is actually given. I believe D should be the answer. Oh, yeah. Wow. Oh, oh, bro. Shit, let me check. Well, later I'll check Copilot for that. Answer is A. I'll give explanation little later. Classify the following statements as being true or false in relation to the characteristics of partnership. Uh, wait, what? Yeah. Classify each of the following statements as being in relationship to the characteristics of each partner has limited liability for the deaths of partner. False. Partner is an employee of the partnership. False. He's an owner of the partnership, not an employee. What? Each partner does not have limited liability. See, it's a partnership. Each partner has limited liability is false. I don't. Something over here is. There's some mistake over here. The partner does not have limited liability. It has unlimited liability. So here answers would be false. False. Each partner is entitled to participate in the management. True. There must be formal partnership agreement signed by all which specifies the respective rights and duties. Yeah, true. There must be. It's not exactly mandatory, but if there is one, it's very good. Next one, which we are doing is uh, classify each of the following statements as being applicable to either limited liability company or partnership. Owner or investor may receive a return on investment in the form of dividend. That will be LLC. Business cannot own assets and incur liabilities in its own name. Partnership. Annual financial statements are not subject to external audit. Annual financial statements are not subject to external audit. That will be partnership. क्योंकि LLC में because LLC all the financial statements are subject to external audit right now. Hey Jordan, what you are doing, bro? Thank you, thank you. All shitty haircuts testing. Loans and borrowing, so the business may be secured by floating charge. Answer is wait, what? Loans and borrowing, some business may be secured by floating charge. I don't know what that means. I will be limited liability company. Loans and borrowings of the business may be secured by floating charge. I don't know what floating charge is, but oh, yeah, it is related to LLC. I'll do explanation little later. Which are the following aspects of financial and non-financial performance and position based on information in the annual financial statements is likely to be most relevant or interest to a bank account that is considered making a long-term loan to a company? Answer is what do you guys think the answer is? Put in the chat. Jordan, you only bro, put in chat. Okay, whoever is watching that one viewer just put it in chat. You guys don't know, I can tell the answer. Okay, I'll tell the answer. Which are the following aspects of financial and non-financial performance is based upon information in the annual financial statement? Guys, it's not the total issued share capital in the statement of financial performance. No. Most probably they'll check short-term profitability. Okay. Interest that is concerned, that will be solvency of the business. Because the longer the business stays, the better it is for the entire company as a whole. So that B is the answer. Hey, what are you doing? Next is 22nd one. Which are the following aspects of financial and non-financial performance and position based upon information in annual financial statements is likely to be of most relevance or interest to potential investor? Carrying amount of property, plant, and equipment in the statement of financial position, solvency, whether the company has developed new products to sell, current and future profitability. Financial non-financial based on information and annual financial statements likely. Current and future profitability. D. That's the thing which most people want to see whether the company would be profitable or not. Uh, 23rd. Yeah, bro, it's D only correct. 23rd. Which are the following items in IFRS advisory council is responsible for? One, to give advice to International Accounting Standards Board or to trustees, to give advice to the. Okay, this part I also don't know. I'll just be checking this part. 23rd is supposed to be A, both 1 and 2. IFRS Advisory Council is supposed to give for both 1 and 2. I don't know how I'll be reading the theory for that part a little later. But now it is seeing what all we know and what all we don't know. Are the following statements true or false? International accounting standards are effective only in adopted national regulatory bodies. True. Accounting standards provide guidance on accounting for all types of transactions. True. Right. Wait. Both of them are true only. It doesn't. Which of the following is the most obvious means of achieving public oversight of corporate governments? Shareholders access to annual general meetings. Okay, 25th one is B. Why? Bro, for which question you're saying, bro? Why? Are you talking about the 25th one? Oh, bro, for which question are you asking? Why? Uh, hello, Aditya. Okay, I'm continuing the next one. Which of the following is the most obvious means of achieving public oversight of corporate governance? Sixth one, 26th one. Wait for six, bro. True. I'll come to that question. Wait. Which body is responsible for issue of international finance and reporting standards? IFRS Council, International Financial Reporting Interpretations Committee, IASB, the European Union. Uh, C. It is C. Now, are the following statements relating to IASB conceptual framework for financial reporting true? Financial accounting. Cost accounting, I know I'm going to fail, so I'm just started off with financial accounting. Bro, I don't know the answer, but that's why I'm looking at answers. This and all, I don't know theory. First time I'm seeing all this. Wait, okay, I'll do see it. Module 3. Today, whatever you thought we'll do. Okay, if you want to do module 2, I'm okay with that also. Module 2, we'll start off with all this. If you're doing it, this module 2 only, okay, yeah. Then with some you guys want to do, we'll start off with that first. EOQ, okay. Everything has EOQ. Wait, I'll bring notebook and I'll start it. Okay, let's start. 12th question we'll start off. Ashton. Starting only one. Okay, starting we'll do. Manufacturing company that has EOQ or no? You wanna do theory? Theory ಬೇಕಾ? Questions ಬೇಕಾ? Oh, theory, okay. Accounting for materials. This part you guys know. Ordering, receiving, issuing materials. This part also you guys know. I'll just be going this part. This is very important for theory. You'll be asking too many MCQs from this only. So there are four people over here. One is the production department. Second is the stores department. Third is the purchasing department, and fourth is the external suppliers. So that first of all, production department is the user of all the raw materials which you are purchasing. Stores departments just stores all the amount of like raw materials which are already there. They just store it. Purchasing department purchases all the goods from an external supplier. External supplier supplies all these goods. So what the order is first of all, the production department gives the goods requisition note to the stores department. So therefore, the stores department gets a goods requisition note from the production department so that they know how many like materials and all the production department needs and all that. So that whether they have the stock or not. And then after that, if they do not have the stock, then they put a purchase requisition note to the purchasing department from the stores to purchasing department. So I understood that part. So first of all, what production department will do, it will give a goods requisition note to stores department. And stores department will give a purchase requisition note to purchasing department. And purchasing department will give a purchasing order to external supplier. So what will he do? From purchase order form, once it's sent to the external supplier, he delivers the goods to the stores department. So after that, they also submit a purchase invoice. Once you get a purchase invoice, then the stores department will go to the finance department and check whether the purchase invoice matches with the purchase order. First of all, if it doesn't match, then there'll be a one debit note, credit note, and all that. If it matches, then at that point of time, the finance department will pay the external supplier. Then after that, the stores department has money. Now, not money, material. Now the stores department will be giving material to the production department. Ashte will be issuing production. So that will be material return note or material transfer note. Hello, Allah. Right. Second is goods return notes. Goods return note and all that part you guys know that you will manage. Inventory holding, inventory ordering cost. So whenever people are holding inventory at that point of time, there would be some associated cost with holding it. So example, capital tied up like opportunity cost, insurance, deterioration, or some kind of damage or something like that. So that point of time, all those costs would be there. Second is ordering cost. Ordering cost is when, example, you're ordering something from a supplier. At that point of time, the supplier will be charging a small amount of money, and also this one, the second part, wait, supply will charge a small amount of money, and also the transportation costs from the suppliers to our place and all that will all cost money. So all of that will come under ordering cost. Understood? Then this part and all that, that's what I was talking about. All this business. Reorder level, that I'll come to a little later. First of all, I'll explain EOQ before that. So what EOQ is? Economic order quantity, which is the best, like which is the best number of orders which we are supposed to do. Like number of orders are amount of goods which we are supposed to order every time we order. That is EOQ, economic order quantity or reorder quantity. We are ordering in such a way that it minimizes the total cost associated with holding and ordering. Wow. Hello guys, hello. Okay, let me continue. EOQ equals to root of 2 into cost of placing an order into wait cost yeah, cost of order into annual demand divided by whole cost of holding. So root of 2 into demand, annual demand into cost of holding divided by um, cost of holding annual. So that is EOQ. That is basic stuff. And EOQ demand is there is no buffer inventory. There's no purchase price is always constant. Demand and lead time are constant and which are known. I know Elna. Elena, who's that? No. Hey, Numan, you only, shit, that's Numan. I put this also in. Okay, next one. Minimum level and all you guys know. Minimum level, maximum level and all you guys know. Reorder level minus average usage into average lead time. Maximum level, reorder level plus reorder quantity minus minimum usage into minimum time. I don't know how that everything is derived and all. I'm just, that's a formula. You guys have to learn it. Perpetual inventory, this definition is very important. Learn that up. Inventory evaluation, FIFO method, AVCO or WACO method is very important. Don't have to learn. I don't think you have to learn the advantages and disadvantages. Acceptable to accounting standards and HM revenues and customs. Jonathan, hello Jonathan. Material inventory account is very important. So it shows it reflects an increase in inventory purchases, returns to store, and credit side is credit inventories reflects a decrease in inventory. So what happens is whenever there's purchases of materials at that point of time, it is debit. It's written on the debit side, and it shows an increase in inventory. And whenever like the production department returns some goods to the material, like to the company, at that point of time, there will be returns to stores. Issue to the production department is when the stores department issues goods to the production department, that will be issues production, and returns to suppliers when there are some goods which are bad, they just return it back to the supplier. So that is basics of material inventory. Accounting for labor. Hello, Jonathan. One of the most important distinction, this direct labor, indirect labor, that and all in manage. Overtime also, I think you guys know what most of the overtime thing is, so that you guys will manage. And, yeah, that's all. That's basic. Yeah, but before that, very important labor turnover ratios. All these you guys are supposed to know. Labor turnover is number of number of levers who require replacement divided by average number of employees. That are all basic stuff you guys will manage. Causes of labor turnover is sometimes family reasons, illness, death, or retirement, or something like that. Unavoidable causes of labor turnover. I already explained that. Avoidable causes: poor remuneration, poor working conditions, the lack of training opportunities, lack of promotion, etc., would be uh, labor avoidable cost of labor turnover. So some of the thing is replacement cost. So therefore, people are ready to just pay extra rather than replacing the entire thing because replacement takes a lot of money. And fourth is labor efficiency ratio. Labor efficiency ratio is standard hours for actual output divided by actual hours work to produce output. So, so standard hours for actual output is like example, a person worked for 400 hours and he got around some 1,000 outputs. Whereas the not standard hours would be again 400 hours, but the actual output which he did was 1,200. So standard hours for actual output over here it would be 1,000 divided by 400, 2.5 units it's supposed to be done. But what he did was 1,200 divided by 400. 3 units he did for wait, yeah, 400. He did 3 units per hour rather than doing 2. So standard hours for actual output was um, so he did 3 units rather than 2.5. Wait, 1,000 units into 4,000. Wait, no, 1,000 unit, 1,000 units he did in 400 hours. Sorry, 1,200 units they actually did in 400 hours. For 480 hours is the standard hours for actual output. So for 80 divided by 400 into 100%. So that means you will get 480 divided by 400. 120% would be labor efficiency ratio. So these ratios are very simple to understand. My explanation is slightly bad, but yeah, it's actually very simple. Idle time ratio, idle hours divided by total hours into 100%. That and all basic stuff you guys will be able to do. Labor capacity, actual hours work to produce output divided by total budgeted hours. Like labor capacity ratio, how much capacity is there to actually do the work is actual hours work to produce output divided by total budgeted hours. So example, they worked for 420 hours and the total budgeted hours is 400. So 420 divided by 400 into 100%. And the actual output over there was supposed to be 480, in the previous question where I was talking about budgeted hours was only 400. They did work for